This is Follow the Money brought to you by Nairametrics in partnership with UBA, United Bank for Africa. My name is Hugo Dre, and I do this every Monday, 8 to 8:30 on this channel. Yeah, how has your week been? It was a bit of a busy week for Nigerians most of last week. If we start from the stock market, very busy week for the stock market. We saw a lot of upswings for stocks. Pretty busy week as well on the crypto side of things. We saw Bitcoin hit 1,000 plus and then dropped a little bit, but still pretty much up there, even though most altcoins haven't really gone up. And of course, the federal government dropped its MTEF, medium-term expenditure framework, for the period 2025 to 2027, I think, yeah. And that is usually the benchmark or the basis for budgets over the next 2 to 3 years. And so that has been the week in a nutshell. So I am going to talk at the second half of this show, we will be addressing the MTEF, just trying to dimension and figure out what it means for the stock market. Oh, by the way, let's not forget the exchange rate kind of stabilized in the official market, excuse me, as well last week, even though it kind of flirted around 1.17, but then average 1.650. But the block market seems to be pulling away from the official market. That sort of collapse that we had the last time where they were largely the same. It seems like it's no longer that way now. And so maybe time permits, we're going to talk a little bit about that. But we go right into the weekly wrap to find out what happened to stocks last week. Of course, this is always a stock market show. And so we'd always start with the stock market. So Nigerian stock market ended the trading week of November 15 on a positive trajectory. All share index, which is essentially the broader index that measures stock market performance, climbed 486 points to 97,722, still below that 100,000 mark that we were all celebrating earlier on in the year. So basically 0.5% increase this week compared to the week before. Looks like the stock market is probably getting closer to that 98,000 mark, but still far away from 100,000 that we saw earlier in the year. So kind of like a mixed performance. We saw 39 stocks appreciating in value, increase from 31 stocks last week. So 39 stocks did gain compared to 31 the week before. And of course, we saw 46 stocks decline this week compared to 42 the week before. So the rest is essentially stocks that were flat. They didn't go up and neither did they go down. In terms of the sub indexes, that's the, you have the all share index and then you also have the sub indexes. We saw the NGX premium index lead the charge with 1.1% gain, pretty small. NGX premium index is the index for the big boys, by the way. And that was basically driven by UBA. Yeah, so UBA drove that index. I think they did about 7.9% last week in gains. UBA shares is currently, and UBA announced their share offer last week. So I think they're likely going to be going at 35 naira per share. So you want to pay attention to that. We did mention last week that most of the banks that have had their public offer or right issue, at the end of that public offer right issue, their share price tend to usually do pretty well. So you might want to pay attention to UBA, or you might want to see that as an opportunity. In terms of the NGX 30 and NGX main board index, we also saw slight gains of 0.31 and 0.29 respectively. The oil and gas index kind of dipped largely because of Owando's share price. Owando has gained pretty much, been one of the best performing stocks this year, even hitting the 1 trillion market cap or joining the SWOOT list. SWOOT is stocks worth over 1 trillion, but the share price has been pulling back for a bit now. So it dropped 10% last week. And then of course the banking index also, grew 2.3%, insurance index also up 2.8%, and the consumer goods index up 0.6%. So essentially most of the sub indexes performed pretty well last week. And then who are the top gainers? This is where you want to check if your stock or stocks in your portfolio was one of the major gainers last week. Why do you need to know this information? Why do you know? Because if you have stocks that have gained pretty well, you might not know that maybe you should be selling them and pocketing some profit. But if you're somebody who likes to keep stocks for the long term, then maybe you probably don't need to sell them. But at least you need to know how well your shares are performing, right? Because a lot of us just have shares and just forget about them. You shouldn't forget about your shares. I have a friend who didn't know that there was a bank stock that he bought several years ago for like 3 naira or 350 kobo, and didn't know that that stock was now worth 14 naira. He didn't know that, and until someone mentioned it to him, was like, "What? You mean I've had that kind of money all this while and I never knew?" Yeah, that's because we wasn't paying attention. So you always want to pay attention to the stocks in your portfolio and make sure that you're tracking their performances. And so last week, we start from the bottom and all the way to the top. The one of the top 10 gainer, number 10, was Aradel Holdings. Aradel is one of the newest companies listed on the exchange, an oil and gas upstream company. They gained 9.9% last week to close at 533.8 naira per share, which is now also, I think this is the second week back to back that they've joined the top gainers list. This week we had a lot of penny stocks. Penny stocks are stocks that are, like penny, penny stocks, small stocks. But Aradel is one of the bigger ones there. Join number 9. Initiates 10%. Consolidated Hallmark Holdings. If you own that insurance stock, you might want to check it again. 10.59% last week. University Press gained 20% last week. International Energy Insurance gained 20.8% last week. Flour Mills, on the back of very important news, they got approval from I think their shareholders for their proposed is it change of name and possible delisting? I don't know, but they did get the approval they want. So the share price went up by 22.89% last week. Sunu Assurances also up 32%. Tantalizers on the back of a major deal, which I would speak to much later on this program, 33.9% up. Unicell, this stock has just been out there gaining week after week. It's just a pretty much small energy company that it's into energy services and energy and technology services, basically just servicing the electricity industry. But share price has been going up, and last week it did 46 whopping percent. Yep. And John Holtz also did 60%. This stock, penny stock, scares me a lot, but I mean 60.5%. And then we'll go to the top losers, starting from the bottom to the top. Right, and then we have Fitson healthcare insurance stock kind of dropped by 5% last week. United Capital, one of my favorite stocks, dropped 6% last week. Guinea Insurance dropped 6.2%. Ikeja Hotel dropped 6.8%. Africa Prudential dropped 7.2% last week. Ella Lakes dropped 7.3%. Abbey Mortgage Bank dropped 9%. I already mentioned Owando. They dropped 10.4%. VFD also dropped by 10% last week. And of course, Dark Communications, owners of AIT, dropped 12% last week. So that's basically cross-section of gainers and losers for the week. So which of your stocks, in your portfolio joined the gainers list and which one joined the losers list? I mean, it doesn't mean that you didn't have more stocks that lost or gained. These were just the top 10 in terms of gainers and losers. So there was a lot of news last week as well. We did see PZ Cousins announced that they have a new CFO. And then I did mention Tantalizer. So there was gist on Nairametrics last week. I remember on this show I was saying that there was something happening with Tantalizers. And then we sort of got wind that there probably was a new investor in Tantalizers. It wasn't really made official because we kind of checked corporate action and we didn't see that there was any new company. They didn't make any formal announcement that that there was some kind of new owner. But we kind of dug in and then they did sort of mention it inside another document. And so Tantalizers has a new shareholder. I'm sure you all know Tantalizers. That's the fast food restaurant, and it's been there for years, but they've been struggling basically, with a lot of the competition you have now in the fast food or the quick service restaurant business. And they've also been struggling with financing and funding, and all that. So that's probably why you see some of their outlets seem a little bit outdated or old and needing a massive investment in refurbishing. But they've been there for years, but now you've seen newer, much better quick service restaurants essentially taking over how Nigerians consume food these days. So they have a lot of work on their hand, but I mean, Nigeria is a massive market, and I think that the likes of Tantalizers can still benefit from, the kind of business that they do, and they do have a very solid brand name as well. So who's the new shareholder? Injected, I think, 1 billion naira in the company. The name is Messrs. Food Specialties. At least that's what we saw. So they and Organics Limited, along with Bank Link Africa Private Equities, acquired majority stake in the company. So it kind of looks like a consortium of companies came together and injected money. Whether 1 billion is going to be enough to get Tantalizers moving is really what I'm not sure of, because 1 billion naira today is not the same as 1 billion naira last year. So, I mean, because of exchange rate. So, but it's still badly needed capital injection in the company, and maybe that could get them a bit more competitive as they move on. And so, because of that capital injection, there were changes in the board of Tantalizers, and so they had new shareholders, new directors come in, and so pay attention to what is happening in that company. So no surprises here. The stock gained 34% last week alone on the back of that news. Remember, we mentioned it here last week that Tantalizers looks like there's a deal that happened in Tantalizers. We did mention it on Monday, and it looks like the market reacted positively to that, and the stock has gained 34%. Another major news that happened last week was Seplat. Seplat, for those who own shares in Seplat or who don't own shares in Seplat, you might not really want to reconsider that. And why do I say you want to reconsider? You always want to have a very diverse portfolio. And one of the good things about owning shares in Seplat is that Seplat pays dividend in dollars. Yeah, so it is an expensive stock. So by no means it's not a cheap stock. Remember, I've always said, how you know whether stocks are cheap or expensive depends on their price to earnings ratio. And so Seplat is not a very cheap stock, currently priced at about 5,000 naira or so per share. Nevertheless, they do pay dividend in dollars. And so shareholders of Seplat always get dividend in dollars. And Seplat tends to pay dividend kind of like at least twice a year. And the company is doing pretty well now because oil and gas stocks are doing well because, higher oil share price and, of course, exchange rate. And so because they pay dividend in dollars, for those who are looking for dollar earnings, then a stock like Seplat becomes pretty much attractive. And so last week they announced that they'll be paying 3.6 cents per share as dividend to their shareholders. And 3.6 cents per share, even though they're not going to pay it in dollars, they usually set a conversion rate. So 3.6 cents times 1,681. That's what they're going to be paying to their shareholders as dividend. And so if you want to put that in, sort of like in naira times, it comes about 60 naira or thereabouts per share. Because 3.6 cents, multiply that by 1,681 and then multiply by kind of 100, so you have an idea of how much they're going to be paying. So that is divided by 100. I beg your pardon. And so that is what Seplat is paying for. So if you're a Seplat shareholder, you might want to pay attention to that. And of course, Access Holdings, Nigeria's largest bank by total assets. They are very good at acquiring companies. I mean, that is one bank that is never ashamed of saying it. Look, their expansion has always been inorganic, essentially acquiring companies. And last week, they announced again that their UK UK subsidiary acquired a bank called Afrasia Bank Limited. It's not a Nigerian bank, Pan-African bank, and it's all part of Access Bank's expansion across Africa. So it's all part of the Access Holding Group. I mean, you all know my own feelings about Access Holding and how they are expanding, but that's really their business model. And so they were on the news last week. Another company that was in the news last week was Dangote Cement. Dangote Cement announced that they were going to issue a Series 1 bond under its 300 billion a multi-instrument insurance program. So big companies also borrow, right? Exactly. So you need to always borrow so that you can have liquidity. So Dangote announced a 300 bond. So for those who are looking for fixed income securities that you want to invest in, especially corporate bonds, then you want to track this one by the time they go to the market. Let's see what interest rate they're going to be given. And that could just be a good buying opportunity. Another company as well that says that it has completed its own bond issuances was MTN. MTN also announced that it successfully completed its issuance of its Series 11 and 12 commercial papers, which are short-term debt instruments that companies typically issue to finance their operations. All right, so that essentially is the roundup of the first half of the show. We're going to be back in a bit. When we're back, we're going to be talking about the FGN budget, right? So I want to talk about the FGN budget and what it means for stocks. I'm sure you've been seeing that in the news, and government is planning to raise 47.9 trillion naira. What does that mean for stocks? Be right back. All right, we're back. Remember, UBA share offer about to be out there. So if you're a shareholder of UBA, you might want to check and see that you also pick up your own shares. They're raising capital, I think 239 billion in capital. So that share offer is out there. Look for it. It's at 35 naira per share. Remember what I told you earlier, most times share prices for most banks that have done a public offer tend to increase after the public offer. All right, so second half of the show, I said I was going to talk about the medium-term expenditure framework, which the federal government did announce. So what exactly is MTEF? So MTEF essentially is basically a model or a template for how the government wants to run its fiscal policy over the next 2 years. So we usually do it so whenever there is an MTEF, it's usually like a 2-year program. Yeah, and then it does come with a lot of assumptions that government puts on ground. And basically the benchmark that most everyone in the economy tends to follow, because it gives you an idea of how the government's perception of the economy and whether their assumptions are realistic or whether they do make sense. And if you're very good at tracking the MTEF, then you can actually know whether to plan. You can have an idea of where the FX will land. You can have an idea of where inflation could be. You can have an idea of how government is going to be spending its money and how you need to also realign your own corporate budget or your own personal budget as well. So I tend to take MTEF very, 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 very seriously. And so I was looking at, the announcement. They did release the document over the weekend and poured into it, and pretty much interesting numbers. So before we get to MTEF, let's even look at how the 2024 budget is currently performing, because you have to look at the 2024 budget, how it's performing, to get an idea of how realistic their projections are for 2025 budget, which they're kind of proposing or they're suggesting could be around 47.9 trillion naira. And so currently for the 2024 budget, the government says that it has raised actual revenue that it's received. That's the federal government, that is 12.74 trillion naira. And then this is 73.8% of its target. Its target is actually 17.25 trillion. So if you prorate it, recall that total revenue that the government was targeting last year was 25.8 trillion. This year, I beg your pardon, 25.8 trillion. So if you prorate it 8 months, it gives you around 17.25 trillion. But it says that it has only gotten 12.74 trillion naira. out of that amount. So they are lagging in terms of budget revenue. So they're not getting all the money that they expect, and they blamed it on some taxes that they are yet to collect. And we kind of like, go into the breakdown of that number. Even oil revenue is even down by as much as 25%. So oil revenue, they were targeting 5.4 trillion naira prorated January to August, and they've only gotten 4 trillion out of it. And then if you now go to the expenditure, which is how government spends its money as well, the 2024 budget was about 35 trillion naira in terms of total expenditure. So if you look at that, they should have spent 23.3 trillion by now, which is January to August, based on the data that we have. We don't have that of September, we don't have that of October. So January to August, they claim they should have done 23.3 trillion in terms of spending, but they've only spent 16.9 trillion. Now, what is pretty interesting in this 16.9 trillion that they have spent is that 7.4 trillion of that amount has been spent on debt servicing. Yeah, you heard me right. So government has spent 16.9 trillion between January and August 2024. But in that amount, 7.4 trillion has gone to debt servicing, almost 50% of the total amount. So interest payments on debt was 34% off over the prorated amount. So they've actually spent 34% more than they were meant to spend on debt servicing. And that's because, we have a lot of naira denominated debts, and interest payments on debts have also increased. Remember, the CBN has been increasing interest payments for a bit now, just so that they can contain inflation. And that also has impact on government borrowing. And so out of the amount, half of it has essentially gone almost half of it has gone to debt, while 3.6 trillion has been released for MDAs for capital expenditure, out of the 2.5 trillion. So if you look at it, capital expenditure, we should have done 9.1 trillion by now in terms of spending, but we've only spent 3.6 trillion. So we're lagging behind on capital expenditure, while in terms of non-debt recurrent expenditure, we should have done 13 trillion, but we're on 12.3 trillion. So kind of looks like capital expenditure is suffering. And for this sort of economy, you do need CapEx to increase, because CapEx is part of what drives economic growth. But it looks like debt servicing is now crowding out, government expenditure. In fact, debt servicing has essentially eclipsed capital expenditure, double capital expenditure at the moment. And so that is not really good for the economy on a macro terms for 2024. So no surprises why things are pretty much difficult for a lot of people this year, because as much as things are very much hard and difficult, you're not also seeing the impact of some of government's infrastructure spending across the country. I mean, look at it, 3.6 trillion compared to 9 trillion in terms of target. And capital expenditure is what you need to kind of drive the economy forward. So when you look at all these numbers and then you now go into 2025 and what they plan to do, you kind of think, can they really realistically achieve some of these targets? And so what are their assumptions? They're saying that they're assuming oil benchmark of $75 per barrel. And they're also assuming oil production of 2 million barrels per day. So $75 per barrel seems to me like a fair estimate, because oil could slightly, average oil prices this year has actually been above $80 per barrel. But of course, there's this sentiment as well that a Trump presidency could see lower oil prices towards the middle and end of next year, as they plan to increase production of crude oil in the US. Of course, people also tell you that, look, well, as much as they want to increase production in the US, they also know that there's an average price that they need to get to for the shale companies in the US to sort of make money. And so that is one thing that is hanging out there. But government is looking at $75. And of course, exchange rate, that's where I really have a problem. They're targeting 1,400 naira to the dollar as exchange rate. We know that we're currently at 1,650 on the official market and about 1,750 on the parallel market. But the government is essentially saying 1,400 naira is their projection. Inflation rate, they're projecting 15.7 when we're closer to 34% currently average inflation rate is also over 30%. So I really don't know how they think inflation is going to sort of half, by next year at 15.7%. So that seems a bit off for me for the year. And of course, in terms of GDP growth rate, 4.6%, slightly higher than IMF's projection. But, maybe they know something that we don't know. But again, if infrastructure spending is not, or capital expenditure is not as high, or they're not meeting their capital expenditure targets, then I don't see how they can really drive GDP growth rate to this 4.6%, even though 4.6% is actually quite tepid. But I mean, that's what they're saying. So nominal consumption, 2.206 trillion naira. So that essentially is their projection for the year. Now, if you now get to the perhaps the budget that they are proposing, which I'd mentioned earlier, they are proposing about 47.9 or so trillion in budget, for 2025, and included in that amount is capital expenditure of 16.4 trillion. That's the funny thing. It's now a lot more than what they budgeted for last year, or this year, 2024, but they haven't even met the 2024 target at all. But then they're not even going for higher. I don't know why they always do this. So they're budgeting 16.4 trillion naira for 2025 for capital expenditure. And of course, recurrent non-debt expenditure, they are budgeting 14.2 trillion naira, which is usually for salaries and overheads of government agencies and all that. 14.2 trillion, more than 11.2 trillion that we had a year ago. Of course, a lot of things have changed. Minimum wage and all that means that government has to spend a bit more on overheads. But here is where it gets pretty tricky. We did notice that the debt service, which I mentioned earlier, the target for this year is 8 trillion. We're already above that target, prorated at about 30% more. But guess what? The government is targeting 15.8 trillion this year. So even more than the recurrent expenditure, right? And just less than the capital expenditure of 16.4 trillion. So that in a nutshell is the budget. And so for me, it looks like this might not be too good for the stock market next year if they go this budget. Bear in mind that this budget is just slightly around $30 billion. I mean, on a dollar for dollar level, it's probably even lower than 2024 budget. But I don't know if the government can actually meet some of these estimates that they put here. And it appears that a lot of the assumptions as well are kind of off. And so that is a bit of a concern. But it's just a proposal. And so I'm sure it's going to be very well debated. And by the time we'll see the final budget proposal that will be submitted at the National Assembly, I expect to see a bit of variations from here. So that has been Follow the Money for the week. Thank you all very much for listening. If you do have further questions, do let me know. Just at Nairametrics on any of our channels and we'll respond to that adequately. Of course, watch out for the podcast version of the show. This is Goodray signing out. Until we meet again next week, do have a profitable week ahead. Goodbye.